Brandon, thank you so much for joining me. CEO of Meow. And Meow, in so many different regards, it transcends just the traditional commercial banking that at least I grew up thinking about. I'd love for you to share a little bit about what the platform includes, just to make sure that everyone knows what Meow is.
Meow is a business banking fintech, and the power of a fintech, in my opinion, is you're not tightly coupled to any one license or one institution. Uh,
Yep.
you're able to kind of piece together the best of the best across the stack. So what we do is on the checking account side, we partner with banks there. We're not a bank. So we offer business checking accounts from our partner banks. And then on the card side, we also partner with a different institution, which allows us to pass back 2% cash back, which is unlimited on almost all spend categories as well. We have cards, we have expense management, we have in-app accounting for cards, we have the high interest checking accounts from our partner banks, we have free wires from them, free international wires. You can send 40 plus currencies, that's to another partner, all from the same dashboard. So we really piece together the best of the best, and that's the power of fintech, is making the app sing despite piecing together all these different things behind the scenes.
That's a fantastic way to look at it because I think so often, at least growing up in banking, I know there's been many products I've pitched and positioned across my career that did pieces or parts of what you described. Some were they were okay. They got the job done. But I think for small businesses specifically or business owners that need to be nimble, it's nice to be able to have so many powerful capabilities, not just power, but benefits. You mentioned the checking account with interest rates being provided, the card components, expense components, having that all in one application versus shopping around and having to piecemeal it in an uncommon interface is powerful. I've asked my husband, who I think we have in common, how did the name Meow come to be? Dying to know.
I just kind of like it.
You just like it? It was just a word. You're like, "Oh, I kinda like the sound of that."
Yeah, we wanted a happy name that could be anything. We wanted a name that kind of made us happy. In the long run, I mean, a name like this, it's the kind of thing that can really catch fire when you hit a certain scale. It's the kind of thing you hear it once and you don't forget it and makes you happy. In businesses, you never know what they're going to be when you start them. So tightly coupling to our idea at the time, we would have been called like Bit Treasury or something like that. Naturally, VCs told us to name it some ridiculous, stupid names like that. So we just picked something happy, and thank God we did, uh, because we pivoted a million times to get here, and people like it.
Speaking of a pivot, you made actually a pretty big pivot career-wise, right? You had previously been in the security space, if I'm not mistaken. How did you see that there was a need to pivot into creating Meow, this happy named company that solves so many needs for business owners?
I got into security early in my career. Since college, I studied it. And I thought if I become kind of the best security expert, then that could be my
Mhm.
way to break into startups, become the security guy, and then maybe do a security company. But one thing led to another, led me to a company called Gemini in New York. And then from there, I took another hop and then ended up starting Meow in a very good funding environment where someone like me, just like a random security engineer, could raise money with my co-founder Bryce. So we didn't have best clout in the world or anything like that. It's just the environment was good. It allowed no names like us to break in.
I love it. By the way, I saw your cheeky LinkedIn post today about founders never forget the VCs that passed on them. So
It's
love
true.
that one. I completely identify with that. I love that you called that out. If I were in your seat, thinking back to when you were determining from Gemini needing to make or wanting to make that pivot, there was some problem that you figured out needed to be solved. I'm sure you wouldn't have spent the time, the energy, all the pivots looking for funding for any other reason. What was the problem you were trying to solve, and how did you validate that Meow could do it and that it had market viability?
There's only a few things we knew. We knew that we wanted to be B2B founders. We
Mhm.
thought that we could do it better than what was out there. And our North Star was that financial services felt a little icky to us always. So that hasn't changed. Regardless of all the pivots we've done, that's always been kind of the guiding philosophy, is like, how do we build the most radically transparent fintech? You know what yield you're getting from the business checking account on the partner bank side. You know what cash back you're getting on the card. It's not points. It's not funny money. There's no wire fees. There's no fees you can't pronounce, kind of thing. That's been the
Right.
North Star. So there's been a series of pivots, but that's really all we knew. And when you just kind of forged, you just kept getting punched in the face every day for years until we found product market fit.
Oh my god, it's the elusive product market fit that once you find it, I think that's your happy day. I would do some sort of figure out some Meow dance to do. I don't know what I would do, but it's so elusive for some. It's one of those things that as you continue to grow and change and the product evolves, sometimes you have to go backwards, I have found, to find it all over again. You mentioned here, though, the B2B angle, and that's somewhat unique, at least as of thinking back traditionally to banking, because in most cases, commercial solutions like your own or those that cater to commercial customers with treasury components, they were partnering with banks. They were partnering with the big core companies, that environment I grew up in. But you determined that that was not a route that you were going to go. You were going to go directly to the businesses. And I mean, how did you land on that? Because I love it. I love the approach.
It's a good question. I mean, that's something VCs try to talk you out of, honestly, when you're starting, is when you tell them you're going to be a direct to site, they say, well, why don't you just partner with this other company that's already doing this, become like an API partner or something? Because it's higher floor, right? And there's so few that actually pull off direct to site. Now, if you can pull it off, that's where all the
Mhm.
value accrues. It's like, whose dashboard are you using? Um,
Yep.
that dashboard's where the value is. They're all trying to convince you to do the easy high floor thing. I don't know why we thought we could do it, and I think because we thought we could, it ended up working out.
At some point when you determined you wanted to get into entrepreneurialism, you went from that operator role to a CEO role. Can you tell me a little bit of just thinking about and speaking to other fintech founders? How did you find that journey? Was that an easy transition for you? Or did you discover that there was some upskilling that needed to be done?
Yeah, I think nobody quite understands what it means to be CEO of a company until you do it, or like a founder, really. It's very easy to look at them, as I did, and think, oh, it's just making the occasional decision and then talking on a panel or something like that. That is the case for many failed founders. That's what they do. But the truth is, Elon Musk says it very well. The CEO is basically the toilet bowl. He says that all the problems that can't be solved by anyone else in the company come to you every day. So it's a constant stream of getting punched in the face. So there's nothing you can do to even prepare for it. I could have been doing anything. I could have been a security engineer. I could have been a salesperson, and I wouldn't be prepared for it. Now, I think there are some skills that can be a tailwind. I think no one quite has an appreciation of how important it is to learn to sell before they start a company. I thought sales team was something from like the 1960s. It's not a thing anymore. No, it's a very important thing. And in fact, it's going to be most of your job as a CEO. So it's just, there's nothing you can do to prepare. And then when you do it, you have a lot more empathy for founders, I think.
Well, oh, I can imagine. And you were in it. The sales component, that's where I see I think my relevance most to the fintech industry because I speak a lot with fintech founders that have been in the more traditional technical fintech founder role. And to your point, having to sell, it's not always the most comfortable thing. And I love that you've navigated it. I'd love to hear more about how did you find and acquire your first few customers? What was that process like? Did you reach out to people you knew? Were you working a network from your investors or your own?
People you know are going to be the most important up front. Now, one thing
Mm,
I kind of thought, which is wrong, was that if you know someone, then it kind of entitles you to have them use your company like when you start. And it doesn't. The truth is it entitles you to a meeting with them to pitch them,
mhm.
which is a lot to ask for in the first place. Thankfully, we pitched it to like all of our closest friends, and one of them used it, which was great. And
Nice.
then what was also very important was we had some like growth angels on the cap table who had big audiences like on X. So when we announced, they all kind of shared it, which gave us an initial wait list. And I didn't know how to do anything with the wait list. I didn't know how to do sales at all. So I'd shoot like one email to all these people on the wait list. And if they didn't reply or they did reply saying they're interested, I wouldn't quite know how to follow up. I wouldn't quite know how to say on them. But thankfully, we had a few trickle in. We hired a salesperson who knew what they were doing. And now we have a nucleus of customers, which is critical for everything we do.
That's fantastic. Was X one of your primary channels that you use to advocate? Any other ones that you use to gain traction?
X and a lot of cold emails, just a lot of
Mm.
hours. people on the team, like Dustin Kamali, just like grinding cold emails. Now it's more so word of mouth. Like when you have a nucleus of like 1,000+ businesses using you, and there's more surface area. Someone will put out a tweet and they'll organically say, "Oh, I use Meow. Check it out."
When did you know you had traction? Was there a point where you're like, "Oh my gosh, this thing is gonna take off?"
There was a crazy point, which was like SVB collapsing, and that's when like everyone was looking for a lifeboat. We saw 500 million come in 2 weeks. That was crazy.
Wow.
That put us on the map. Honestly, that's when like the word Meow like we appeared in a bunch of articles, like on LinkedIn. We crossed 1 billion. That was big. But honestly, like you kind of have to like micro reinvent the business every year to some extent to stay in the game. Even like Facebook is still doing that. Rebranded to Meta. You always have to reinvent to some extent. So it's always a game of cat and mouse kind of.
This is why I find people asking and talking about 3 to 5 year plans so interesting and almost as irrelevant these days because at the rate that things change, it's almost a constant, like you said, iteration. If you're not doing so like quarterly, looking and determining if you need to reinvent, I think you're going to be one of those companies that is left. Some of the logos that you mentioned, laying off big numbers of people. I think there's been some announcements today pivoting more into the AI space. I am curious because you sell B2B and directly to businesses. I don't know if you've ever had any experience selling to customers, to clients or end users directly.
No, I haven't.
It may be tough for you to determine if it's more difficult or do you think it's easier to sell to businesses? Probably tough to say.
With businesses, there's more stakeholders. So when they get to like
For
Series
sure.
A, B, C, like it could be a board, it could be a VP of finance, multiple people to wrangle, etc.
Yeah.
Consumers is one person, which is nice, but flip side is hyper competitive on the consumer side, like to a point that I don't fully understand. The business market, like it's certainly competitive, but not to the point of the consumer angle.
Mhm.
Like the margins are super thin, the compliance costs are even higher than business. I like
Right.
being in the business space. I want nothing to do with the consumer space.
I think it's easy to get behind the mission as well for businesses serving and working with, especially small businesses. It's an easy thing to rally behind, making their world and their lives easier because they touch their own employees, they touch their community as well. How do you see things evolving for Meow? Do you have an idea as you look out on your roadmap? Any big things coming next that we should be paying attention to?
Yeah, we believe we can build something similar to the Costco of financial services.
Tell
So
me.
Costco is famously a volume business, not a
Mhm.
margin business. So they make very little on any one product they sell. They pass back the majority of the savings to the customer, but they sell a lot of that product, and they're one of the best companies I think out there. I hadn't seen someone apply that to financial services. My co-founder and I, we hadn't seen that.
Mhm.
It always seemed to be things like zero interest checking accounts with high wire fees, high this fee, high that fee, lock in. So what if someone applied that to the $16 trillion financial services market? It's the kind of thing we can do forever. The pie is it's an enormously big market. It's infinite. It's the kind of thing you can compound year over year over year. So it may seem simple, but the growth opportunity is kind of unmatched. And if we keep tripling or doubling every year into infinity, then Meow would be a household name. So just about making the basics better and better for customers and pushing the limits of the savings we can pass back to them.
I love that. Yeah, is that a driving force for you guys to push the savings back to them? Is that just part of your ethos there?
Yeah, that's very much our brand. That's very much our ethos. That's what customers know us for. We couldn't have gone to, even if we wanted to, just to be clear, we couldn't have gone to market with the same zero interest shenanigans that like
Yeah.
an alternative fintech does, for example.
Mhm.
An incumbent fintech, let's say, or multiple incumbent fintechs. No one would have used us. It's like, what's the differentiator? But it is actually what we care about too.
Yeah.
And being second mover and being lean allows us to do that.
And that kind of brings me to just a question I have about long-term competitive advantages. You kind of mentioned that this was a differentiator for you, just focus on the customer. Obviously, you have a great team, a team of people that love what they do and all also rally behind serving the customer in a way that's different than the other players that are pulling those shenanigans, like you mentioned, 0% type of accounts. Um, like, I guess, would that be a competitive advantage for you, just the way you approach? Don't let me put words in your mouth. Maybe I should just ask you, what do you view as more of a long-term differentiator from you?
Yeah, we think about this a lot. We actually think it's like the biggest thing possible. Um, we think that basically in like 5, 6 years, nobody's going to be able to compete with us. And the reason for that is because we approach venture capital funding very differently than everyone who's bigger than us.
Hoot.
Uh, yeah, so like you look at the incumbents who have like their 2 billion valuation, 10 billion
Mhm.
valuation, 12 billion valuation. They seem to have anywhere from like 300 to 1,000 employees. Number one, they have board members and VCs who need to see a certain amount of growth quarter to quarter, and they
Mhm.
can force bad behavior on the companies, which is like if they're not growing externally enough, they need to find that growth by jacking up prices internally on their customers. You have all these pressures. You have a valuation to live up to. You have an incredibly high headcount to live up to, and you have growth numbers that you need to live up to your board. Now, what we did is we raised about 30 million. We didn't give up a board seat, and we spent virtually none of our Series A funding, 22 million Series A from May of 2022. And the reason we did that is because we think everything's a commodity here. It seems like everyone else is going to have to continue to jack up prices more and more year over year over year. And we can go in the opposite direction because nobody can pressure us otherwise because we have infinite runway, basically. So if you extrapolate that over a 5 year period of getting very good at being the leanest and the meanest and the deepest ocean on the margins, then how do
Mhm.
you compete with that business equation? We've been doing it for so long, in 4 or 5 years. So that's the thesis. I think it's pretty obvious, and people will catch on in 5 years. It takes VCs several years after something has already happened to understand it. So they'll understand it eventually.
That's such an interesting take on it because you're right. It's contrarian to the way that the VC environment normally functions. So, really good tip. I'm going to ask if you could provide some others, another learning. I don't want to make you go to your darkest day, but if there's a mistake that you look back and think, ah, crap, if we just wouldn't have done this, or if we wouldn't have taken this step, we might have been farther along. Do you have any of those types of learnings? We'll spend
Yeah,
to
I mean, after we raised our 22 million Series A, we started the business from scratch like 3 weeks later because the entire business model was failed. It was flawed. We had to start from zero. So basically, everything we've done has been in the past 2 years. The first 2 years of the company, we just were nothing. Like we started from zero 2 years in. That's one. But more concretely, I think it'd save founders a lot of time if they listen very carefully to this part. Is if you are interviewing someone and they say, "I'm a builder at heart," or they say, "I want to get my hands dirty again," you can hang up the phone right then. You don't need to
really?
do anything else. Yeah. Those are people who don't belong at a startup. Those are people who are going to waste your time, who wants to get fat salaries to come from their, big job at a big bank or big tech company and think they have what it takes at a startup. It never works out with those people. So you need to find the thankless, nameless people who want to grind to make a name for themselves. They're scrappy, that have been at startups or just coming out of getting their first job or something like that. Those are the people
I
you really want.
I love this. I love this because I do think it's tough. It is tough to find the right people for the startup mentality for sure, especially after they've come from a large logo behind
Yeah.
them. If you were going to start another fintech today, you're going to just let me out, continue to grow with the team that you've established. What would you tackle with this next fintech?
I think all of us are basically building the everything company, whether we like to
Mhm.
admit it or not. We're all building the same company, like all the incumbents in Meow. So I think we're going to touch everything in this boat. We kind of view Meow as a boat instead of as a
Mhm.
thesis. It's like a boat for these smart people to figure something out. Just keep the boat up, keep it afloat, and you'll get to your destination, basically. So it's not so much about starting a different one, it's just about ordering things correctly and getting to every financial service you could possibly imagine. So if there is a financial service, we want to offer it and we want to have it at the best price possible, like better than everyone on the planet. It's going to be a long road to get there, but when we do, it's unstoppable. You can't compete with that, is our opinion. That's very much the Meow ethos.
If people are looking for you, Meows, obviously check out the website. It's also a very happy website. You can't look at it and not smile. But any events, any place to find you if they're interested to learn more or hear more from you?
Yeah, at Meow on X. Meow.com is great. And I'm at Brandon or X. Just tag us, we'll reply.